Good evening, ladies and gentlemen. This is Clueless 8 Trading. Frank, end of the week report for May 8th, 2016. The previous video cast, or one of the previous video casts back on Sunday evening last week, was accurate and is mandatory for everyone to view before they go ahead and listen to this particular version and the follow-up on last week's actions. Couple of important observations. We are going through, as we always do, but more so right now, an extremely volatile period. The market hit exact levels that I pinpointed weeks ago, and since then has retraced back, give or take a couple of points, to pretty much what I forecasted on my videocast last week. Tactical volatility, or what I call structured volatility, is intense. In order to navigate these particular markets, requires focus, discipline, and as many of you are listening to this, I appreciate the fact that you guys are being disciplined in understanding what happens on the background, because that background is what dictates what happens on the front side, which is stocks that we trade. Now keep in mind, there are individual stocks that I've pinpointed. There's a bunch of them which have no correlation with the market, which have to do with buyouts, which have to do with FDA approvals on the biotech side, stocks which are being accumulated by funds, mutual funds primarily, and hedge funds, aka Amazon. Earnings plays, which we have had some substantial winners in between a couple of losers. Majority have the winners. So that's what makes the market. Tonight, I'm going to cover two video casts. The first one is going to cover the indices, give a preemptive, or as the big word, political word these days is presumptive, forecast on the markets. Traders, investors, and members have to track that on their own screens, make a determination on their own, and decide whether or not they want to be bullish, bearish, and keep in mind that everything is short term at this point. We have come a long way from these bottoms. The bottom from August and September of 2015, the bottom from January and February of 2016, forecasted levels, which was I explained in detail, as in the probability of these markets getting up to those levels, have been achieved. And at this point, we are going through some technical and critical retracement levels. Whether or not we are going to completely break down, create some massive volatility, where the market keeps on testing the downtrend line, the 34 and the 50-day moving averages, and then collapse, we don't know. There is no way to tell. There is an enormous amount of macro global economic data, and the most critical ones I've posted on my Twitter real-time feed. So it's highly suggested and mandatory that members and traders skim those headlines and try to understand what's happening in the background. Remember, the key determinants of macro global factors that drive the outside market, i.e. stocks, is currencies, economic data coming out of China, US economic data, and Federal Reserve policy. The best of the minds out there getting paid $10 million a year to figure out the markets fail to even come close to the forecast and analysis that is being presented to you on the Clueless Day Trading Service. And I am not kidding. So appreciate it, act on it. Do not be uber bullish or uber bearish, i.e. dogmatically bullish or dogmatically bearish. Be tactical, sometimes very short term intraday, sometimes on the swing side, maybe a couple of days. But keep in mind that the best of the analysis and the information is being delivered here on the Clueless Day Trading Service. That is not a sales pitch, that is a fact. Saying all that, let's dive into the technicals. Here we have a picture of the Dow Jones Industrial Average. You can see we have come a long way. Let me just explain to you a bunch of the lines that have been drawn to put a structure to this chart. And then it's your responsibility to try to understand it, join the advanced coaching sessions, and make the best out of it and maximize your trading and investment portfolios. So let's start off. First of all, let's focus on the moving averages, which are the determinant of where prices are going. This is the 34-day moving average, the orange line, and the 50-day moving average. This thin yellow line that you see here curving is your 5-day moving average. If you want to be extremely short-term trader, you track the 5-day moving average. You want to be a swing trader, you want to track the 34 and the 50-day moving averages. It's really as simple as that. We're going to talk about internals in a few minutes. Okay, so the moving averages, as you can see, are still curling, are still moving up. If you simply look at these two lines, there is no indication whatsoever yet, as I like to say for now, that these are going to curl down. When you see the 34-day moving average curling down and the 50-day moving averages starting to do the same, you know we are in for a very hard time on the downside. Now, it is not hard if you position yourself on the lower side, which I have had tactical shorts many, many times. If you listen to my last video cast from last Sunday, I called the exact levels that the market would pull back. Yet in between that, we have not seen a fundamental change or a trend change, as we like to call it, on the moving averages. They are still moving up. Second, let's take a look at where we are with these channels. This is still a consolidation channel. I'll call it CC. So this consolidation channel is still intact. We got to the bottom of the channel. We tested this downtrend line from up here from the 18,300 level on the Dow. See this line? See how beautifully they match? It's incredible how perfectly these lines have been drawn. You have a Bollinger, this beige line. It kissed the Bollinger. It almost kissed the 50-day moving average. It tested the downtrend line. It's called the confluence of very important technical levels. So this is an extremely powerful level, extremely critical level, I should say, which is somewhere in that 17,500 to 17,050 level. You can see that, right? Right there. All these lines match. The bottom of the consolidation channel, the retest of the DT line or the downtrend line, kissing the lower end of the Bollingers, right? Almost kissing the 50-day moving average, which happens to be at, if you want to be exact, at 17,540. There, right there. And all this happened within a matter of days. So now what happens? Well, let's try to figure out what the probabilities are. I repeat again, and write this down in your mental frame as well as on your trading screens. Trading and investing is a game of probabilities, not a game of certainties. I'll show you first the bullish version, then the bearish version. How about that? Okay. So on the bullish version, what we can see is this major confluence, very critical level. We are in the middle of it and looks like we are about to bounce. This rectangle that you see here is what I call my version of the Darvas box. The lower end of that is 17,400. But let's stick to what we're seeing right now. So at this point, a possible bounce, a max reflex tactical bounce brings us up to somewhere around 17,900. So you're talking about another 150, 160 points or so that we can pick up on a sharp move up. You're going to hit some major resistance at this level, in my opinion, and there are two scenarios that can happen. After that 160 point bounce or so, you could either come down to the bottom of the channel, retest the DT line, retest the lower end of the channel around 17,480, 17,500, try to bounce, or possibly break down. A breakdown would bring us down around 17,375. All numbers. All numbers. Like one rich New York billionaire said to his wife, honey, it's all about numbers. Well, guys and ladies and gentlemen, it's all about numbers. So wake up. All right. At that point, you have a major support level, as you can see here, going back all the way to end of March, third week of March. And you possibly could create a market structure low, MSL, dragon bullish formation. At that point, we could either have a powerful bounce, again, back to that 17,900 level, or if we do break down, well, in that case, we're looking at some levels which max pain is down here at 16,500. And then you can draw this line here. And why did I draw that at 17,100? Because that was a powerful support level and a trading range that broke down back on January of 2016. So the bearish version is that if we break that 17,375 or 17,400 level, then we are going to head quickly lower another 300 points to test 17,000 to 17,100. That's it. It's really as simple as that. Let's not try to make things very complicated. In the old days, you could actually look at charts and make a determination over what's going to happen over the next week or two, and basically, make a forecast, and it'll do the same thing. But these days, you're dealing with a great friend of yours. It's called the algorithmic high-frequency trading programs, which have only one purpose: to steal your money, your profits, whether on the long side or the short side. My job, as I've been very successful at doing, is to pinpoint those levels so you know what you're dealing with. Now, how you manage your individual trades, the little demons in your head, the screaming, the screams in your head at times that you're going the wrong way, is completely up to you. I am not a mental therapist. I'm simply a technical analyst, in between showing you the fundamentals of what's going on. So, bullish version, I repeat, let me make this short. The bullish version is we get to the top of this range, out of this box, get to was the 17,850, 17,900 level. At that point, the uber bullish version would be we break out and we test again the 18,150 or so. But in my opinion, we're going to hit that there. We're going to slip. It's going to move down. If we are going to trend channel trade, then it's going to move up towards this channel, possibly come down again, get up there. Again, the same story. Rinse, repeat. What is it? Rinse, repeat, follow. Same thing. If we are going to continue the upward pattern, then breakout of this particular consolidation channel, CC as I call it, is critical. That would be the bullish version. The bearish version would be we keep on hitting it, keeps on getting lower, and then we break down. At that point, like I said, you have this to go for. Now it's the Dow Jones Industrial Average. You have a major breakout level here after this huge double bottom. We pinpointed that. That's at 16,400. Can it happen? It can sure happen. My opinion is that the test of the 15,500 and the 16,000 level does come about, but it's probably not going to come as quickly as we think. Can't give you a time frame that when it can happen. All right, not yet. Done with the Dow Jones Industrial Average. I got 3 minutes left on this video cast. Let's take a quick look at the S&P 500. Fast. I'm going to go real fast here. Consolidation channel. We have a major support level here at the 225, 235 level. It looks like we are starting to form a we seem to be creating a possible dragon bullish pattern to the top of this consolidation channel, which is around 2070, 2080. We like the fact that the internals are starting to base. Just because it's starting to base doesn't mean it can go like this. But if this curls around and crosses over this white line on the stochastics, you're going to see a powerful move up towards this end. This is a rising wedge. This is a consolidation channel. If we break this support level at 2025, we are looking at the 200 and the 100-day moving averages somewhere between 1990 and 2000. That's it. Next move. I got 2 minutes left here. Nasdaq Composite. Daily channel here showing you some swing stuff, okay? Again, same story. We're starting to see the stochastics starting to curl. Every single time that it's done that, it's had a powerful move, a real powerful move. Keep in mind the difference between these two lower stochastics and here is because we're at a higher level. We are retesting the 34. The 50 is at 4,800. A breakout of the 50 is a gap fill here around 4,950. And remember, the 5,000 is the headline psychological number on the Nasdaq that the media loves to talk about. In order for that to happen, we need to see some real cooperation from high-level momentum stocks like Apple, Google, Amazon, which is already doing its job, and other Nasdaq 100 stocks. The downtrend line retest, again, is at 48 and change, 4,800 and change, and 5,100 is a real retest on the major downtrend line. This we like. Let's see what happens. But the 34 and the 50, keep in mind, are still curling up. I don't have time here to cover the Russell 2000, which I think is a very powerful measure of the market for both political and economic reasons and technical reasons. I'll cover that on the next video cast. So keep it real simple. The crossover is still intact. The lines are moving up. Yes, we have come down. It's a nice falling, it's a falling wedge or a